This is Jay Martin.
All right, here I am with Peter Krauth. Peter, it's good to see you. Thanks so much for making the time to come on today.
Hi, Jay. Thanks for having me. I look forward to our chat.
Me too. Yeah. And it was great seeing you at our events in Vancouver just shy of a month ago now. And you've been busy. You put out your book, which I just received my copy of. Thank you so much. I really wanted to read it in advance of talking to you, but it showed up yesterday, so I'm going to get to it. But I just got to congratulate you on the foreword by Ross Beatty, the testimonials by Evie Tucker, and Ronald Stofferly, who's a favorite on our channel here. And so, obviously you're in really good company, and the book has generated great respect with people of influence. So I want to congratulate you on that. For anybody who's not familiar with you, Peter, real quick, who are you and how do you spend your time?
So I actually am editor of a newsletter, silver-focused newsletter called Silver Stock Investor. That's part of Resource Maven with Gwen Preston, who writes the Maven letter. And we teamed up in mid-2020, looked at where big potential existed for, years ahead. Silver was something that was a very quickly realized common denominator for both of us. And then within a question of a few months, launched Silver Stock Investor. That was January of last year. And we've had great response, very happy with, how the market has taken to it. And within a few months, it was a bit of a dream is to eventually write a book. Silver made perfect sense. It's something I've been researching, writing, and investing in for about 2 decades already. And thought to myself, we're in the middle of a pandemic. There's really not a whole lot else to do. If there's ever going to be a time for it, this is it. And so I got right down to it and got going.
That's the best way to use that time to create, right? I love that. So The Great Silver Bull is the name of the book. Give us the highlight headline, Peter. What do we take away after reading the book?
So, I think that we are really at the end of a 40-year bull market in stocks and bonds. I believe that, first of all, these are historically long outlier bull markets in terms of length. And if we really are at the end of that, and it certainly looks like it, that there's a shift, I think inflation is going to be part of the investment landscape for probably the next easily 5 to 10 years, high inflation. And you have to look for alternatives. And the best way to make money is to look for things that are cheap and highly undervalued, and will do well in this kind of environment. And silver has proven itself over, multiple times over the years and decades and even millennia as being a store of wealth and a great performer in times of inflation. And so I basically give an overview. The book's written in 5 parts. I talk about the history of silver, why it matters today, why it's irreplaceable in terms of supply demand, and we can get into that maybe a little bit. It's both a monetary and an industrial metal. Then I talk about what makes silver move, what's particular about the silver market, and then finally how to invest in silver. Everything from physical silver all the way down to junior explorers.
Let's stick with the monetary and industrial use case for now, and I guess what I want to ask you is, what is driving demand today? And I would say silver is maybe undervalued from my perspective alone, undervalued from a monetary standpoint. People understand the industrial application, but silver is more frequently thought of as an industrial metal compared to gold as a monetary metal. Do you agree with that? Do you disagree? And do you think that's going to change in the near term?
I agree with it. And I think it's also a fact. I mean, if you look at gold, 8% of gold is used for industrial purposes, whereas for silver, it's 54% used for industrial applications. And the single largest application within an industry is solar. That's 11%. That takes 11% of the entire annual supply of silver, which is about 1 billion ounces. So 110 million ounces go to solar alone. And if you look at the International Energy Agency's forecasts within the next 8 years, so by 2030, solar installations and consumption, let's go with solar installations. they should be up as per forecast. And I think that's too aggressive, but still, even if they make it halfway, it's still something to be reckoned with. But that solar installations should be up about 8.5 to 9 times. So if solar alone uses over 10% of the annual supply of silver, and it's supposed to be up by 9 times within 8 years, technically, according to that, it would consume all the silver supply of every year. So even if it makes it to half of that level, which I think is, still aggressive, silver prices have to go much, much higher. And something we haven't accounted for, and a colleague of mine by the name Chen Lin, I believe he spoke at your recent conference. He highlighted how technology in solar panels forecast for higher consumption by about 50% in the next likely technology, and by 150% in the technology to follow that. So forecasts are for silver loadings to kind of plateau. In other words, the consumption per silver per solar panel to actually plateau at these levels, but it's likely that silver consumption per panel will rise at the same time as solar installations rise. So, I mean, it's just a parabolic growth trajectory just from that one application.
So let me hit you with the devil's advocate point that I hear most frequently, and I've got an opinion on this question, but I'll let you go first. Yes, I agree with that forecast if we see 8.5, 9 times increase in solar installations as one example of the skyrocketing demand from the industrial sector. But we're looking at recession, possible depression that a lot of pundits expect to be more dire than recent history. So if that occurs, growth's going to halt. And what's going to happen to these forecasts of the energy transition and our bright solar future? And how will that impact solar demand? Silver.
I agree completely. And I think that kind of goes back to what we talked about earlier, how silver is unique as both a monetary and an industrial metal. And half of silver demand goes to anything other than industry. So there are, a variety of applications, but if you look at what those are, really there's some sort of form of investment. And what's, I think, also underestimated is how silver demand from silver ETFs, which have really soaked up a lot of silver supply, is underreported. Silver ETFs now account for 1 billion ounces that are, I'm going to say, essentially off the market. That's debatable because that silver can be sold back into the market. But what we've seen since the first silver ETF came to market, that was the SLV 2006, there is a rising sort of a staircase effect in the amount of silver that's held in silver ETFs. The silver levels in inventory go up, then they'll go sideways, then they go back up, and then they go sideways, and they just keep climbing. Even when you have periods, in fact, there's a chapter in the book that I call Silver is Sticky Money. And I analyzed the chart. I was looking at it, about a year ago, and it struck me that I was looking at this chart of silver inventories in silver ETFs globally, and it struck me that even when because it was plotted against the silver price. So I saw that when there were dramatic drops in the silver price, I said, okay, this is interesting. The inventories in silver ETFs don't drop off. I mean, they will, pull back a little bit, but in terms of in relation to the drop in a silver price, let's say you could have a 30, 40, 50% drop in the silver price, and yet you'll have maybe a 5 or 10% drop off temporarily in inventories in silver ETFs. Mm-hmm. So that meant to me, people are buying silver through silver ETFs, and essentially they're hanging on to it. I mean, those units will change hands, but the inventories are staying level and or climbing. There has been no significant drop-offs. So people are buying that silver through ETFs and they're hanging on to it. And so, I mean, that's a bit of a longish answer to your question. If you don't mind, what we talked about, you were saying, if there is recession, if there's an economic slowdown, That's true. So I have sort of two, I guess, points to raise. One is that industrial demand obviously could suffer. However, governments like to stimulate. Their green programs are some of their favorite programs. And so silver is a very important metal in green energy. Look at solar, look at EVs, for example, lots of demand there. And I believe that they're going to continue to promote and push those programs. So that would potentially continue to support silver demand. And what's interesting too is that when you have those kinds of conditions, people look at silver for its monetary characteristics. Mm-hmm. And so I think that industrial demand is likely to keep what I feel is a rising floor under the silver price, and the investment demand is going to be sort of the marginal explosive side of the silver price. And that's what could really lead it into, new, much higher levels.
Okay, I'm with you. Yeah. And you know what? It's the same question and debate when it comes to the copper space, right? Aggressive forecasts, bullish demand forecast. But what about this economic stagnation we're maybe driving towards? And my thoughts on that are, we get kind of narrow-minded when we look at economic growth. We look at the US, we look at China, right? And it's like, okay, what's happening in these two economies, which is obviously important. They're enormous, but it would take the entire world to universally agree that we're just going to stop growth today. We're happy and satisfied with where we're currently at, emerging economies included, and no more. Let's just halt it here, right? US can slow down, China can slow down. It would make a massive impact. But the healthiest balance sheets are the emerging economies. And look, there's a few billion people that are still living without electricity, and they're headed that direction, right? And so the global demand, I think, is off a lot of people's radars when it comes to this specific debate. Anyways, okay. Now you cover something in the book, and I only know this, like I said, I haven't read it yet, but an important topic. And you said, most importantly in the description, when to sell your silver. So I want to talk about that because it's, in my experience, the harder part of the trade is when you're in a position and you want to get out. You're holding physical, and do you want to get out? So talk to me about, let's start with that. How do you cover when to sell in your book? And let's go there right now.
Sure. So in the book, I have what I call 4 silver peak clues. These are, I'm going to say, obviously, none of it's going to be conclusive. It's always difficult to pick an exact top, just like it's difficult or impossible to pick an exact bottom. But if you look at these different indicators, and let's say, 3 or all 4 are flashing sell at the same time, then odds are it's probably a good time to sell. And I also talk about how to sell. So that's a sort of a sideline topic as well. But the 4 clues are FOMO. So if fear of missing out, if you see that we've gotten to a point where people just have to have silver, it's all they're talking about. Silver prices have run up. You have lineups for people to buy physical silver. Then there's that, analogy, 1980, late 79, 1980, when silver peaked. You had people lining up for blocks. This was January. In the Northern Hemisphere, it was the middle of the winter. And yet people were lining up for blocks to buy some physical silver. So that was one indicator. Silver, ultimately peaked at $50 in 1980. You've got the gold silver ratio, which bottomed in 1980 at 15. Today we're at 82. That ratio has averaged in the last, say, 20, 30 years, about 55 or 60. Ultimately, I think that the ratio will at least get below 30, perhaps down to 15. But if it starts to get at least below 30, time to pay attention, watch for a potential peak in the silver price. You've got the Dow silver ratio. And the best analog we have is the 1970s again, when we had a secular bull market in silver. That ratio had what I call 2 downward waves in the first half of the 70s, and then again in the second half of the 70s. And so I don't remember offhand the exact level that it bottomed at. But if you see that kind of action in the ratio where you see a run downwards, that means that the silver price is basically gaining dramatically against the Dow, the Dow index. Yeah. So if you get that kind of action, again, that's kind of a peak to look at, a potential peak for silver prices. And finally, the silver to real estate ratio. So in 1980, about 1,500 ounces would buy you the average US home. Today, it takes about 18,000 ounces of silver to buy the average US home. So the forecast is, let's say, at current prices, the average US home is about $500,000 US. The ratio, 18,000 ounces of silver to buy your average US home. If you see that ratio eventually fall, it may not bottom again at, this is just looking back at history, but if it were to get considerably low, let's say 3,000 ounces of silver to buy the average US home, perhaps even down to 1,500 ounces, then you'd be, you'd have your fourth indicator that silver is, has just gotten way too expensive,
Time to buy the home. Right.
Exactly. Yeah. Time to sell your silver and buy yourself a home. Exactly right.
All right, got it. Okay, last question, Peter. Talk to me about your portfolio. Where have you put cash? Where are you looking to put cash?
So, one place for cash, I think, the interesting thing about silver is that it remains relatively cheap compared to many assets. It's a hard asset. And these days, that's certainly somewhere where you'd want to focus. So physical silver is one way. Silver ETFs, my favorite in that camp is easily the PSLV, the Sprott Silver ETF. And I've told subscribers that, with premiums on silver coins these days, really close to double what they normally are. One way around it would be to buy a silver ETF, wait for premiums to come back down, because as a silver ETF, you're going to buy close to spot, just maybe, 1% or a few percent above spot. So that's one way you could sit in there and wait until premiums come back down to normal. And when they do, and you want more actual physical, you could actually sell some of that silver ETF holding and switch it to physical. From there, I'm looking at, I'm going to see the best value is, in fact, it really is across the board. We've seen sell off in everything from, the royalties and streaming companies and the large producers all the way down to the explorers. Mm-hmm. So what I would be doing at this point is looking for the companies that are well managed, well capitalized, have people with a great track record. One of my filters is how much silver they either have or produce. A lot of silver companies or companies with silver in their name aren't really silver companies. They will quote in silver equivalents when they're actually base metal companies. Mm-hmm. So my filter is at least 40% silver content or silver revenues by production. And from there, layer in. We're getting to the point, late June is seasonally where you hit a low in the silver price. And so we're getting close in terms of at least seasonally, historically, when it's time to be the best time of the year to buy silver and silver investments. So I think just layer in, look for companies that fit those criteria and buy gradually. Don't dump, whatever amount you want to allocate to a specific company. Give yourself a question of weeks, months, and buy it in 2 or 3 tranches. And that's one way to mitigate your risk.
I love it, man. Okay. Thank you, Peter. Once again, it's the Great Silver Bull. I'll promote your book all day long. Where can I send people to pick it up?
Amazon, available in Kindle or in paperback. Exactly. Best way.
Okay. Thanks, Peter. I appreciate it.
My pleasure. Thanks, Jay.
All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness. And the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, thanks again.